Hey there, happy Monday. Hopefully you had a great Christmas and New Year. Just want to send you across my weekly market update for this week. So if you're getting this email, you're part of my small group that I would like to keep them informed about the Houston market and what's going on for buyers, sellers, builders, and developers. So first things first, if you find this helpful, it'd be awesome if you give me a quick reply and email and let's jump straight into it. So big picture, what this means for the Houston market. So big picture, the 2025 market is normalized. It's not crashing. So if you haven't seen that in big headlines, oh my gosh, the real estate market is crashing. The data is showing it's not crashing. Early data shows that 2026 is shaping up very similar to what 2025 was. So expect a very similar market as what we did last year. So inventory is back to near 2020 levels, which brings stability, not price acceleration. So obviously post-COVID, we saw prices skyrocket, interest rates dropped. It's going to take another kind of big, national event like COVID to, bring those rates down to what they were in that post-COVID 2020 times. So rates are ended the year around 6.2, almost a full point lower than last December. So it is improving confidence for those buyers out there. There's no data pointing to a major price collapse without a full economic meltdown. Like I mentioned, if we have another COVID, obviously that could be a potential, rate dramatic drop. But other than that, we don't see that happening in the near future. For sellers, okay, so real quick, so sellers now outnumber buyers roughly by 83% in Houston, which means buyers have more options in time. So we're seeing a little bit more of a buyer market right now. A little more selection for the buyers to choose from. Obviously, with the rates being where they are, buyers are a little bit more hesitant than they have been in the past. So overpricing leads to longer days in market and bigger reductions later on. So obviously, this is something that most people understand. Most sellers are not urgent, which is why prices are kind of stabilizing instead of falling sharply. So a lot of sellers are in the process. We're working with several right now that are, they don't need to sell, they just want to sell. So we are seeing that in our own business. Homes that sell are priced for today's competition, not last year's market. So it's very important to hire an agent that knows the data and kind of can break down the market for you while you're pricing your home, so that like the bullet point mentioned, that you need to understand today's market, not what was going on last year. So it could drastically change within a couple months due to the fact of seasonality and also just the type of buyers that are on the market right now. So other than that, expect a longer timeline and more negotiations, especially above the medium price point. So talking about those are at the higher range, a lot of those buyers are coming in due to the fact of there is a lot of inventory on the market right now, and they're trying to negotiate during the obviously sales price as well as the option period. For buyers, so buyers are gaining leverage even though prices remain relatively stable. So pending home sales just posted their strongest reading in nearly 3 years, showing buyers are active. So even though we are seeing a little more inventory in the market, a lot less buyers than there was in previous years, post-COVID, we are seeing a lot more pendings going on, which meaning that, there are buyers out there circling. So if you are a seller, it may not be a bad time to list your property, and due to the fact of there are buyers circling the market. Rates near low 6% are better than they were last spring, improving affordability. So like I mentioned at the beginning of this video, rates are improving. So that means there's more buyers out there. More inventory means less pressure to rush and more room to negotiate price and terms. Waiting for a big price drop is unlikely to happen this year unless there's a big economic downturn. So for builders and remodelers, so Houston is firmly a buyer-leaning market. Like I mentioned several times in this video, spec homes are moving much faster than custom builds due to the affordability constraints. Buyers are value-driven, not data-driven. So meaning like good finishes and selections, do matter rather than what's timing of the market. Overall, overbuilding similar floor plans with the same kind of price kind of slows things down due to the fact of buyers out there are looking for a little bit more of uniqueness in today's market, especially in the inner city. and then clear pricing and strong execution when in a market with abundant choices. So that's just why you need to work with an expert like the Silva & Co team. But last couple things is quick take on migration and demand. So Texas is now a 50-50 inbound outbound state, so showing migration has normalized. So obviously, post-COVID, we saw a lot of people traveling to Texas and a couple, moving out, but it's kind of normalizing now. So Houston still ranking among the top 5 markets nationally for total sale volume. So Houston's a great market to be in, whether you're buying or selling. So demand does exist, but it is selective and price sensitive. Last little couple pages here. So luxury market, Houston specific. So luxury prices softened modestly year over year, but activity remains steady. So quick kind of internal data here. So, even this photo here is 830 Azalea, one of our high-end listings we have in Oak Forest, Garden Oaks. For example, we had 11 groups come by this open house yesterday, and then we have another one on Richelieu, 1330 Richelieu, which is another high-end listing in Oak Forest, and we had a total of 7 groups come by that one. So we are seeing a lot of buyers hitting the market on the high-end luxury market. So it's good to know that there's a lot of buyers out there at those price ranges. Just for reference, this one is 2.349 830 Azalea. So nearly 13% of listings nationwide are over $1 million. So increasing competition at the top end of the range. So they have a lot more to choose from than they have in the past. Last little update is going to be rates and economy. So mortgage rates are expected to stay roughly between 5.75 to 6.75 in 2026. We're not going to be seeing a dramatic drop. So if rates are averaging 6.25, sale volumes could increase meaningfully next year. The job market seems stable, removing pressure from forced selling. So hopefully you guys found this helpful. Like I said, I'll be giving this update on a weekly basis. Let me know if anything else comes your way. I'm happy to kind of sit down and talk, more in detail about any of these topics or even specific to your market. Have a good rest of your week, and I'll talk to you guys next week.